We have 10 new weekly dividend ETFs. I've touched on only one of these so far, so we're going to go through all of them today. I cannot believe we are seeing a continual amount of new weekly payers being created. I said at the beginning of the year, I should go back and find the clip. I said they're going to come out with more of these. They're popular, people are buying them, and since then we've seen more than 20 new ones be created. Absolutely phenomenal for those that love passive income and making money in the stock market. If you guys don't know me, my name is Spencer, and I talk all about income ETFs, all about stocks and ETFs, and honestly, it's my passion, so I hope you guys enjoy this video. If you are interested in weekly passive income, in making money in the stock market, and joining a group of active ETF investors, don't forget to like the video and to subscribe so you never miss the future free content that could make you some money. Let's roll that intro. RexShares is coming into the weekly paying dividend ETF game, and they are coming in hot. We can see they have 4 weekly pairs now. We have COII, the Coinbase weekly pair, MSII, which a lot of you guys have been commenting about, and I am pumped. I will be doing some more content on this, hopefully very soon. This is on MSTR, one of the most popular stocks for all of these weekly pairs and some of the monthly pairs. Then we have NVII, which I made a video on already. Very excited. It's NVIDIA. And then we have TSII, their Tesla weekly paying fund. Now, I think that what RexShares is doing is really interesting. So we're going to get into the details of these, but I want to say right off the bat, they're using growth and income, which is a little bit different than what we've seen. I think it's closest to ticker MST, but the leverage is lower. Saying, maybe it's less risky, really depends on the market, but less leverage usually means less risk. Now we can see, based off what they're saying, Rex growth and income ETFs combine amplified exposure with the potential for weekly income by harnessing volatility through an options-based income strategy seeking to generate a better balance. I think this is phenomenal. We have not seen a bunch of distributions from these yet. The only one that has paid out is ticker NVII. They paid out the first time today, which when you're watching this should be yesterday. Now, what's really interesting is how these portfolios are built. So half of it seeks to generate weekly income via a covered call strategy. So when you think about this, if only half of the portfolio is being utilized for the covered call side, the dividends will likely be less. Is that a problem? It depends on what you're looking for. Let's talk about the other half of the portfolio, which is an uncovered portion, allowing uncapped upside potential. And I know what you guys are thinking. Well, why would that be different? Why do we want that over just a fully options-based or a fully leveraged-based? The cool thing with this is, when we look at ETFs that have been trading on MSTR, like MSTY, it's performed extremely well. The distributions have been massive, but you still would like to, at least for me, I would still like to make some money on the parabolic move that we've seen from MSTR, from PLTR, and from NVDA, of course. All of these have moved exponentially. So it would be phenomenal to hold and get half of that with just growth, and then also get some of that weekly dividend income at the same time. And what I think will be really interesting is how these perform compared to the options-based. Are we going to see NAV erosion? Are we going to see it consistently move upward? Because what we've seen with a lot of these single, I'm not going to name names, a lot of the ones we've been tracking in our weekly dividend ETF account, we've seen consistent NAV erosion. And I do name names over in that video, which I'll link at the end of this one for those of you that are interested. And I don't like that. My style of investing, sure, maybe I'm a little more old school, but I don't like worrying about my actual invested capital when I buy into something like this, because I don't want to watch it erode over time, even if the dividends are phenomenal. And so what I'm hoping is that we're going to see a phenomenal mix of these two marrying in these ETFs that are going to not only grow, but pay you more. And another aspect when it comes to these, yes, they're leveraged, but they're not as leveraged as some of the others. One thing I'm really interested in seeing how this works with is dividend reinvestment, aka DRIP. For those of you that don't know, DRIP is when you reinvest your dividends directly back into the stock or ETF in which they were paid from. I like using DRIP for a lot of things, but I've kind of changed my tactics with DRIP. Now I don't automatically have it DRIP. I buy in only when the stocks or ETFs are at a price that I'm happy with. And so what I think would be interesting is it almost seems like, depending on how the underlying performs, of course, but with NVIDIA, I'm long on NVIDIA. So dripping would make sense to me with these distributions. And the fact is, once you drip, now you're getting 50% of that in reinvestment going to dividends and 50% going into growth, kind of marrying the two, which is an ongoing battle, growth versus dividends. And so let's go over some of the key factors here. We talked about this, how it's split up. The weekly income is from call premiums, but I want to slide all the way down and see this. How does the fund generate income? The fund generates income by selling out of the money call options on 50% of the portfolio's synthetic notional value. So it doesn't sound like they actually own the underlying. These option premiums are distributed weekly, while the uncovered portion remains positioned for stock upside. I really like this. We can also see the main risks. Capped upside on the portion of the portfolio covered by calls. Of course, you're going to have capped, meaning that half the portfolio, if you have NVII and NVIDIA goes 50% more, you're not going to get 50% returns. You're going to get roughly 25%. And that, of course, depends. We can see synthetic exposure risks, which we've seen, NAV fluctuations, which we've seen on a lot of these, and potential mismatch between ETF and stock returns over periods longer than 1 day, which nothing new really. But I'm really interested in what you guys think of these Rex ETFs. I think they have crazy potential, and to be honest, I like them for my trading style. It's kind of like a FOMO thing. For those of you that don't want to miss out on growth, but also want to have some nice income, these could be amazing. Another portion too, if you think about retirement with these, being able to, if you're able to retire on the dividends alone and keep that growth going, or retire on some of the dividends and keep the portfolio growth going with more dividend income, there's so many options with these, but I think it's a phenomenal idea. And again, this is only 4 of the 6 new ones that we have. So we have a lot more to discuss. So let's jump into our next weekly dividend ETFs. Of course, we have the GraniteShares Yield Boost ETFs, 5 new weekly payers that just converted from monthly to weekly. If you guys didn't catch the video of me interviewing the CEO of GraniteShares, Mr. Will Rind, it was a phenomenal time, a great conversation. Felt more like talking to a friend than interviewing somebody, but that guy knows his stuff. So check that out if you are interested. It's on my channel recently. Now, we have NVYY, TQQY, TSYY, XBTY, and YSPY. So of course we have NVIDIA, QQQ, Tesla, Bitcoin, and SPY. And what I'm really interested in with these is the fact that we have some larger ETFs that we've talked about, right? We have QQQ and SPY in this. We haven't seen that from any of the other weekly providers. So I am curious. I want to know what you guys think. Should I add these to the weekly dividend ETF tracking account? Should I throw these in, make weekly updates on them? Is that something you guys would be interested in? Simply because I think they're unique. But the way that when I spoke with Mr. Rind about it, these are unique in the sense that it's a 2x or a 3x leverage. Whether you're talking about the single stock or a 2x, the indices or ETFs, QQQ and SPY are a 3x. So it's not necessarily something you'd buy and hold forever for retirement. So I don't want to showcase them if they underperform what people are thinking because we bought them at the wrong time when the fund is not meant to be held. Genuinely. That's the way these trade. They're really, really unique, and I think that's really cool. So let me know what you guys think. And I have a full other video breaking all of these down. Just search GraniteShares on my account and you should be able to find them. Really interesting stuff here. I'm really, really, really happy with what GraniteShares has been doing. They're really pushing things forward in the ETF space, and we're seeing a lot of competition. Now, one thing I want to mention, we also have specifically XBTY, which is the Yield Boost Bitcoin ETF. That is something that I think would be worth watching closely, especially as we see Bitcoin continue to hit almost near all-time highs. So let me know what you guys think. Should this all go into the weekly account? Should I track them? What do you guys think? And let's check out our last new weekly dividend ETF. Our last new weekly payer is ticker BCCC. And I'm really excited about this too because Bitcoin has been taking over, and Global X is an interesting one, right? They have a number of ETFs. I haven't owned their ETFs for a while. I will be candid with you guys. I bought QYLD originally, and it just wasn't my favorite. So I think that they were a little bit behind. Maybe they're doing a bit better now, but this push to a weekly payer is definitely something I wasn't expecting from them. So let's talk about it. BCCC's partial covered call strategy allows investors to capture a portion of Bitcoin's capital appreciation while seeking to manage its inherent volatility through the pursuit of option premiums and distributions. Kind of similar to what we've been talking about, what we've seen. The option strategy seeks to generate income while maintaining a consistent weekly distribution schedule. Consistent will be interesting. If they are able, I don't know if they mean consistent with the amount or consistent with just paying every single week. Both would be good. If it does pay weekly, you need it to pay every single week, but I would be interested in seeing how it pays out and the percentage, of course. BCCC delivers access to a portion of Bitcoin's growth potential through a familiar and efficient ETF wrapper. So again, this does not directly invest in Bitcoin. So if you're wanting a Bitcoin growth ETF, this one's not for you. We can also see, I mean, the NAV 2488, net asset 2.5 million, pretty small. It is pretty small. That is, it's new though as well. I do not believe it's been trading for long. I don't even know if we've seen any distributions yet. Let's see. They don't have it on here if they have. But all in all, I think this is interesting that a lot of these companies are jumping into Bitcoin. They're jumping into crypto ETFs. There's a lot of potential for more weekly payers. And again, I want to know, do you guys think this should go in our weekly account? If so, why? Let me know in the comments. And what other stocks would you like to see these weekly ETFs created on? I was thinking it would be cool to have SoFi, maybe even Reddit, some of these stocks that have been kind of really performing well and surprising a lot of people. I haven't seen one on SMCI yet, but I know that one is gaining a lot of traction. So let me know, what do you guys think? What other ETFs should we be creating? And by we, I mean everyone else, not us specifically, but maybe they're reading our comments, maybe they're listening. So speak out, talk about what you think would be a good weekly payer to add. And as always, I hope you guys have enjoyed this video. If you need a broker to buy the weeklies on, check out my link for Moomoo, where they're giving away up to 30 free stocks, and they're doing 8% on your uninvested cash, which is amazing. On top of that, what I like to do, don't tell them this, but I just get the stocks, I sell them, and then I use that to buy the weekly payers. I've seen all the weekly payers on Moomoo almost immediately. It's hard to find them on a lot of other brokerages. So if you're interested and you want to have some fun money, check out Moomoo. Not financial advice, of course, but it does help support the channel. And if you found this video entertaining or educational, I'm going to throw up these two videos on the screen right now that you may enjoy as well. So I hope you guys did. Let me know again in the comments, and I hope to see you in the next video.